Kerry Packer once said you only meet one Alan Bond in your life. David Bryant of Rural Funds Management met an Alan Bond in the form of Great Southern Plantations. They bought his business at a great price, and then they went broke and he bought it back at about a tenth of what he'd sold it for. The Rural Funds Management business is really starting to take off because the value of farms is beginning to rise. But David didn't always get it right. He had to learn from his experiences about 10 years ago when he had the formula wrong. But he's changed his formula and now it is much more appealing to his customer base. And that's a lesson for everyone in business. David, you've had a remarkable story in agriculture. But before we start on that, we've currently got a supermarket war and pressure on farm prices. What's going to happen, do you think, to farmers in the agricultural sector?
Oh, I think that the discounting that's going on in our retail food sector at the moment is not going to last long, and that we're going to see a period of rising food prices. I mean, we're already seeing it in red meat, but that'll flow through into other commodities or other basic foods as other countries are competing with the Australian consumer for the same food, and so there will be pressure on prices.
Why is this happening? Why is these shortages developing globally?
Yeah, most people would be familiar with China and India and the emergence of these enormous middle classes, and this is happening on a scale that's never been seen before. I think there's 300 million or 350 million middle class people in China now, and that's I mean, whilst it's happened on a smaller scale in previous cycles, it's never been with such a large population. So it's just a lot of people joining the middle class.
And agriculture is having trouble keeping up?
Yeah, I mean, we've had from 1980 through to 2005, 25 years of declining agricultural commodity prices, and that's created underinvestment in agriculture. So there's been not as much investment in productive capacity. That's going to have to turn around now, and of course these higher prices will send the appropriate signals to the farmers to make more food. And they can do that by, for example, putting more fertiliser in when they're sowing their crops, and that'll create a higher yielding crop.
And that means the supermarket wars aren't a long-term affair?
Yeah, no, I think this, enjoy it while it lasts. Yeah.
David, you started your Rural Funds Management business in 1997 and you had some tough times in those early years. What did you learn from that?
Well, the first thing I learnt is that there's a 1 in 100 year event every year. And in the early years we had a drought which really started about 2002, got really serious then, and that was the worst drought since European settlement. In 2003 we had the highest evapotranspiration rate by 25%, the highest in 200 years. And I can repeat, I mean, last year we had the most rainfall in 200 years, and there's plenty of examples of this. And so what I learnt is that that there are more risks than you perceive, and I suppose what we've learnt is that less debt is better, and mitigating those risks through good management and through diversification are the key things.
So how did you change your business?
Oh, well, a lot of it was the hard way, but I mean, I'll give you an example. Over time, we've changed the type of funds management product that we offer to the investor from one that has a lot of agricultural risk to one that lays off the bulk of the agricultural risk to counterparties. So instead of owning a farm and managing it and giving the investor the slings and arrows of that investment, we instead buy the farm, develop it, and then lease it out to a counterparty. And by that mechanism, we lay off the agricultural risk, we generate some income and get capital growth. That's the most fundamental change that we've made. But in that process, we've had to go from cotton production into almond production, and that's required a significant investment of additional capital. And when you need additional capital, you have to make changes as well. So we've had to, make it up as we go along a bit, but because some of the circumstances that we've been confronted with have been unprecedented.
And you're in the chicken business too, aren't you?
Yeah, we're Australia's largest contract chicken grower. We grow chickens for Steggles, and we have chicken farms in New South Wales and Victoria.
And is that business going well?
It's been a very good business for our investors, and good for our funds management business. We've got $100 million of chicken farms, and with the higher red meat prices, there's big demand for new farms to be constructed, and we'll be part of that.
But your greatest saviour might be said to be a company called Great Southern. Just how did that Great Southern exercise work?
Yeah, we I think about in late 2006, whilst we'd never had any direct competition because we produced a very vanilla standard funds management product, just a simple unit trust that investors could invest in. We had no competition in that regard, but we were starting to be killed by substitution, and that was that these tax-effective managed investment schemes had proliferated and were expanding enormously. And Great Southern was the most successful, the largest company in that business. In 2006, in 2 weeks, I had 3 phone calls from companies wanting to buy our business, and I thought I'd better pay attention. And combination of that and this substitution that was really choking our business, I capitulated, I suppose, and sold the business to Great Southern in July 2007. And I was contracted to work for them for the next 3 years as a fund manager, which I was happy to do. And but then I can remember where I was. I was in Parliament Place in Perth when the GFC started, and I can remember being on the phone and the share market was melting down, and the world changed. And then
you got cash though.
Yeah, I had cash. Yeah.
Okay.
Yeah.
And then of course you bought Great Southern back.
Yeah. Well, first of all, I bought some cheap shares actually, but they got cheaper. But that wasn't too bad. But then, Great Southern really got into financial difficulty as part of the GFC. They had too much gearing, and their business model came unstuck. And then they went into receivership in I think April 2009, and then we worked with the receivers over the following year to buy the business back.
At a fraction of the old price?
Yeah, it was about 1/10 of the sale price, so that was, and the business was still in good shape, so it was a bit of good fortune, but probably a fair bit of tenacity as well was required.
A bit like Alan Bond and Kerry Packer, isn't it?
Yeah, a much humbler transaction, but a better multiple probably.
What's your aim for Rural Funds Management in, say, the next 2 or 3 years?
Yeah, there's a lot of interest from institutional investors in agriculture now. The big pension and endowment funds in North America are diversifying rapidly into real assets, and part of that is agriculture. They adhere to the discussion we had earlier, but also they're looking for an inflation hedge because they're fearful that inflation is going to erode returns from equities. So there's big expansion from institutional investors. So we want to continue to grow our existing retail funds management business, and I've been in Melbourne, attended a breakfast of advisors that support our funds this morning. But then we're working with some North American institutions to look at starting an institutional agricultural funds management product as well.
Do you think this will push the price of rural real estate higher?
Definitely. In all the previous super cycles where we've had periods of inflation, you see commodity prices increase, and just like the price of coal mines have gone up, so will the price of agricultural commodities. They're just simply lagging because the Chinese needed to build power plants first to create a middle class, and then once they've created the middle class, they buy the food. So it lags, but it will follow the same same path. We'll have a lot of rich farmers around, just like we've got rich coal miners.
And you want to be part of that?
Well, I hope to make some investors wealthier at least. Yeah, that's my job.
Thank you, David.
Oh, you're welcome.